Everyone, welcome to Officers Adda 247 class. So before to begin this class, I would like to say if you're new on the Officers Adda 247, so just subscribe the channel so that you can get regular update from our side. And if you have not downloaded the Adda 247 application, just download so that you can get everything at a one place. So let's start today's class. Okay. So this is a class of your second of your module C, okay, where we are going to discuss the module C MCQs. And with the discussing, we also just discussing like the basic concept behind every question. So just try to understand. If you I just want to say that just use a pen and paper, because if you're finding anything is important, just pen down that. Okay, so let's start with today's session with a very important first question. And whatever the questions I just included in my slides, that all based on the previous year memory based questions. So just try by your side, and if you whatever the concept I'm just telling, just writing down that. Okay, so just let's start and just tell me what would be the answer of this question. And the one more important thing before to begin this class, just hit the like button on this video as well. So whenever we talk about, like, we have to like we are talking about the inventory. So what we understand by the inventories, when we talk about the inventory, we have to understand inventory is a type of the stock if we're talking about the firm's warehouse. Okay, so there is a mention like if opening inventory is given, so we are talking about the opening inventory, that you can understand. Suppose that is starting of any financial year, okay, and we are talking about any companies. So for that company, or say for any business or any organization we are talking about, so you can understand like opening inventory is a kind of the opening stock, like for that financial year, for the beginning of that financial year. So that would be your opening stock. Okay, so if I talk about what would be the opening stock here, so opening inventory, that would be your 1,20,000 rupees. All right, now cost of revenue from operations, you can understand the cost of just let me write in a very big font, just a minute. Okay, so what we understand, the very first thing, that opening inventory, so that is given 1,20,000 rupees, isn't it? And the cost of revenue from operations, so you can understand this is the cost of goods sold, right? So if I talk about the cost of revenue operation, or you can understand as a cost of goods sold also. So we are talking about the cost of revenue from operation, that is given the 10 lakh rupees. Now inventory turnover ratio, this is a very important ratio, because here you have to just find out the closing inventory. And this question is a very nice, and this kind of the question you are going to get in the examination in the 2 marks. Okay, so just try to understand, like in very simple way we are going to solve this kind of the questions. Okay, so whenever we talk about the inventory turnover ratio, so like I always say in my lectures, like you never have to memorize any ratio. Okay, you only have to just formulate by your own. If I'm talking about the inventory turnover ratio, so you have to understand there is a talking about the turnover, that means there is a one thing that you will include here, that is cost of goods sold, and another thing, that is inventory. So you have to write here, that is average stock, or say average inventory. So average stock, you can also understand, that is the opening stock plus closing stock, and it will be divided by the two. Okay, let's understand here. So cost of goods sold divided by the average stock, and this value is given the 5:1. Okay, because this is given the 5 times. Okay, and we have to tell the closing inventory. So from that you can understand cost of goods sold is actually given you, that is 10 lakh rupees. And if we just write here that is 10 lakh rupees, that means your average stock value, that would be, that would 2 lakh would be here, right? So if I talk about what we determined here, actually we determined the average stock value, that is 2 lakh rupees, right? Okay, so now if I just talk about, just a minute. So from this formula we actually derived our average stock value. So that is that is 2 lakh rupees. So now if I say average stock, what we understand by the average stock, that is your opening stock, yes, that is plus closing stock, and it would be divided by the 2. And now you can understand it would be actually equals to the 2 lakh rupees. Now if I say here, you can understand this will make the 4 lakh rupees. So opening stock plus closing stock, you can just write in a way, that is 4 lakh rupees. Now you can understand the opening stock is already provided to you 1,20,000 rupees. So from that you can just calculate 4 lakh minus 1,20,000 thousand rupees, and that would be equal to the 2.8 lakh rupees. So that would be your answer for this question. I'm hoping that everyone just understood this beautiful concept, because in from this question we are actually understood about what we understand by the opening inventory. And this is a very complicated question. Let me just explain you. This is a very complicated question, and you can just understand how simply we solve this kind of the question. And if you just watching if you just watch if you just are uh, if you're just a student of my batch, okay, whatever I just taking the session, so you can definitely that would be really easy for you, I think. Okay, so now just attend the second question. While preparing the balance sheet of a company, debentures is shown under which head? You know, whenever we're talking about the debentures, it is actually something like we just thinking, right? It is a very complicated term. And what is a debentures? Okay, so you have to understand debenture is a type of the bond, and what is the purpose of the bond? That to raise the capital from the investors or from the general public. Okay, so debenture is the same type, or debentures is a type of the bond that actually uses for raising the capital, and that is actually uses by the company. Okay, and if I say that is actually uses by the company for raising the money, so you can now understand it is it what would be like, it is what it is, long term borrowing. That would be the answer, because it the debentures is actually uses by the company for raising the loan, and that not for the short term period, that is actually for the long term period. So that's why it is considered as a long term borrowing. All right, so I'm hoping that everyone just understood this concept. And if you're finding this lectures are very interesting, so you can also share with your friends, so that maximum number of our bankers can join with us in this session, and just hit the like button as well. Okay, so now just understand and just try to solve the another question that is given here. Just let me just tell what would be the answer of this question. Here you have to calculate the current ratio. Just tell me what would be the answer of this question. You know, whenever we are talking about the working capital, okay, what we understand by the working capital, you just whenever we're talking about the question, you only have to understand working capital is nothing but a current asset minus current liabilities. That's it. Okay, so working capital, that is equal to the current asset minus current liability, and that would equal to the 7,20,000 rupees. Okay, now, if I'm talking about the trade payables, whenever you're talking about the trade payables, so now the very first thing that you have to understand, that is the term that is a payable. Payable, that means the amount that you have to pay, or say if you are the company owner, that means you have to pay the amount to your creditors. Okay. So trade payables, that is given the 40,000 rupees, and it is the kind of the current liability. Okay, so trade payables, you can also understand the bills payable, accounts payable. Okay, so that all will be considered as a current liabilities. And whenever we talking about the working capital is given and the current asset, we actually have to formulate the current asset, because this is a calculation. We have to find out here the current ratio. So just quickly tell me what would be the answer of this question. Just let me see that who will be the one, who will be the first for giving the question, the answer of this question. So whenever we talk about the current ratio, what is the formula of this? Current ratio is equal to current asset divided by the current liabilities. And if you're watching the carefully here, that current liabilities is already given to you, like trade given already, plus now trade payables, that is 40,000 is already provided to you, right? So that is also included in the current liability, or you can also say the total current liability. So now you can understand that would be equal to the 2,40,000 rupees. Okay, now if I ask you what would be the current asset here, so working capital is given, right? So working capital is given, and current asset we have to find out. So that would be equal to the 7,20,000 plus 2,40,000 rupees. So now just tell me what would be the answer of this. That would be equal to the 9,60,000, right? If I'm not wrong here. Okay. So that would be equal to the 9,60,000 rupees. And current ratio we have to formulate. So current ratio is equal to current asset, that is your 9,60,000, and it will be divided by the current liabilities, which is 2,40,000 rupees. Okay, this is the current liabilities. So your answer, that would be the 4:1. That is the correct answer for this question. Okay. So are you finding these kind of the thing, these kind of the stuff is so much interesting to you? I'm hoping that. Okay, and if you're understanding very well here, so now just attempt another question. Claim against the company not acknowledged as debts are shown under. When we're talking about a kind of liability that is known as a contingent liabilities, and what we understand by the contingent liabilities, that liability you can understand with the example. Like if I say you are the company owner and you just sold some products, okay, and some products are on the warranty, right? So there may be some chances that some products would come under the warranty stage, right? There may be chances. That means some future events that may not, or say that is that you are not sure about that. Okay, so for that event you can understand that is a kind of the liability, that is contingent liabilities. And in this, suppose at any case that is filed against the company, so that is kind of the contingent liabilities. Okay, so the liability which is not acknowledged as a debt, but it is, it may happen. So whenever it may happen, that you can understand is a kind of the liability, that is contingent liabilities. Okay, so I'm hoping that everyone just understanding this concept here. So claims against the company not acknowledged as debts are shown under the contingent liabilities. Okay, right. Next question. So many questions in this session you have to solve. I'm thinking that everyone just using the pen and paper, right? So just tell me what would be the answer of this question. Whenever we talk about, we have to just calculate the gross profit ratio. So the very important thing, that what we understand by the gross profit. Okay. So whenever we talk about the let me write here. Okay. Whenever we talk about the gross profit ratio, so you have to understand the gross profit ratio is actually the gross profit and divided by the net sales. Okay, and it is multiplied by the 100 for getting the percentage term, right? So gross profit that actually given in the question, that is 40,000, and you just do not have to be, you do not have to be confused in the examination, like gross profit is given and how to calculate the gross profit ratio. So gross profit ratio is the formula of the gross profit ratio, that is gross profit is divided by the net sales into 100. So whenever we talk about the gross profit, we have to calculate, we only have to write here the gross profit that is given the 40,000, and it would be divided by the net sales, right? So the net sales is that is given, you can also just write the net sales or the cost of goods sold, right? So that is given the 1,60,000 rupees. You can also write here that is cost of goods sold, or say cost of the revenue from the operation. So this would be equal to the 40,000 divided by the 1,60,000 rupees and multiplied by the 100. So that would become the 25%. That would be your answer for this question. Okay. So I'm hoping that everyone just can relate the different terms, and everyone just understanding the different terms here. And the very important thing I would like to say, if you're finding anything is important, just pen down that. Okay. Next question. A business entity has net sales less than its cost of sales, it will result into. Now, the very important thing I would like to tell you here, what is the formula for the gross profit? What is the formula for the gross profit? Anybody can tell me what is the formula for the gross profit? That, whenever we talk about the formula for the gross profit, it is actually your net sales minus cost of goods sold. Okay. So whenever we talk about, we have to find out the gross profit, you have to understand gross formula for the gross profit is the net sales minus cost of goods sold. Okay. So if the question is like we are talking about the business entity has net sales less than its cost of sales, so sales it will result into. So now you can understand, if this is a formula, if your net sale is less than the cost of goods sold, then it will convert into the gross loss. So the answer, that would be the gross loss here. So gross loss is equal to the net your cost of goods sold minus net sales. Okay. So that will be the formula for the gross loss. So that is a kind of, whenever we talk about if the net sales is your less than the cost of goods sold, then it would be considered as your gross loss. Okay. Right. I'm hoping that everyone just understanding this. Now just try to solve this question where the opening capital is given, drawings are given, asset liabilities are given, and we have to formulate the closing capital. Okay. So what would be the answer of this? Just try to solve this question. This is quite a simple question. If you're just knowing the term, okay, then it will be some kind of the easy question. You know, when we talk about, we have to find out the closing capital. What we understand by the closing capital, you know, whenever we talk about the closing capital, we always have to understand asset and liabilities always we formulate as when the balance sheet is prepared, right? So suppose that balance sheet is prepared and the asset given, liabilities are given, and we have to formulate the closing capital. So you know the accounting equation, that is equal to the asset is equal to liabilities plus capital, right? So that you can understand by the accounting equation, or you can also understand as a balance sheet equation. Okay. So now if I ask you that asset is equal to liability plus capital, now you can just tell me what will be the total capital here. You know, whatever the statements, whatever the other information that is given, that is all, that is useless for answering this question. Okay. So opening capital does not require for this, drawings are not required for this. If there is a question like we have to calculate the profit, then these information is necessary for calculating that. Okay. So capital we have to formulate. So your asset is given the 8,50,000 minus the capital, that is minus your asset is given 8,50,000 and liabilities are given 75,000. So that would become the 7,75,000 rupees. So your answer, that would be the B. Yes, that would be your answer, and that will be considered as your closing capital. Okay. So that's how we solve the questions in the examination. Alright, now just try to understand another question. Net profit or net loss is calculated as part of which of the following? This is a very important question from the exam point of view. Okay. You know, whenever we're talking about the preparation of the final account, when we talk about the preparation of the final account, you have to understand, in the preparation of the final account, we talk about the preparation of the profit and loss account and preparation of the balance sheet, right? So whenever we talk about the preparation of the final account, there will be two things we have to understand. The very first, profit and loss account, and another, that is a balance sheet, right? So whenever we talk about like the net profit or net loss is calculated as part of which of the following? So the correct answer, that is the profit and loss account, because if we talk about the gross profit or gross loss, then it is calculated as part of the trading account. But when we talk about the profit and loss account, net profit or net loss is calculated by this account. Okay. This is a very important, just write down that. Okay. Now understand another question. Which of the following items is shown under the head non-current asset? You know, whenever we talk about the assets, we have to understand that assets are actually the two kinds. The one that is current asset, another that is a non-current asset. Current assets are actually those assets, that actually considered the short-term investment, and the non-current asset is actually considered as a long-term investment. Okay. Or you can also understand the assets, those you can just convert into cash during the, within the 1 year, and those assets which you can convert into cash beyond the 1 year, so that is known as a non-current asset. So now the question is that cash is actually considered as your current asset. Current investment, that is also the current asset. Inventory is also the current asset. The only thing that is your intangible asset like patent is considered as a non-current asset for your organization. So that's why it will considered as a non-current asset in the balance sheet. Okay, so that would be your answer for this question. I'm hoping that everyone just understanding this concept here. Now the next question. According to the prescribed order of the assets in a company's balance sheet, which the asset should be shown first of all? Very nice question it is. You know, the correct answer, that is the, just let me tell what would be the answer of this question. If I talk about, what is the prescribed order of the asset whenever we talk about the balance sheet, because in the balance sheet you are just going to make assets and the liabilities, you know. So in this question, what would be just first of all, what asset that shown? So the correct answer that would be the non-current asset. Okay, so non-current asset you actually going to understand as a long-term investment, right? That means those assets you can convert into cash beyond 1 year. That is known as a non-current asset. All right. So tell me how many marks you all just got in this 10 MCQs, and if you just received, if you just got 6 marks at least in this MCQs, then my dear friend, you are going at a very right pace for your preparation, because we actually considered the very moderate to difficult level questions in this slide. The only purpose that you can understand the concept. Okay, so now I just want to tell you that our target batch, if you just still it is not late, because the only few classes is started, is still the very important classes of the module B, module C, that is still not started. So there is a very good chance now still you can just enroll in the target batch. There you will understand the concept as well as the important questions what I discussed. Okay, and you are going to get the books, topic by test series, everything you are going to get in this MCQs, in this target batch. And the very important thing I would like to tell you, you just do not need to pay the full amount of the batch. You only have to use the code Y422, and with this code you are going to get the very big discount on any batch. Just try to apply one time, and after that you will just understand this is a at a very minimal price you are going to get. Okay, so now I just want to show you how you can enroll in our batches. Okay, so that it will be so much easy for you. Just a minute, I am just explaining you that how you can just enroll in our batches. So the very first thing that you have to visit the adda247.com, and after that you will find the multiple batches that is actually running into the JIB section and CIB section. Okay, so just a minute. Okay, so now what you have to do, that you have to just visit the adda247.com, and where you just go to the JIB CIB section, and after that you can also enroll in the JIB CIB Maha Pack, where you are just going to get there is also offer that is running on, like you are going to get the double validity in some batches. Okay, and okay, there is something, maybe the offer is ending. Okay, so if I talk about, you only have to just go to the JIB CIB section, and under the JIB section where you find the multiple batches that is running in the English and the bilingual language as well. Okay, because whatever the if I say whatever the discount we are just talking about, that is only for the limited time. So just just make the benefit of that. Let's see, just Maha Pack is just over. Okay, so now if I say that target batch, if I'm talking about the target batch for the English medium batch, so in this batch you are going to get like the perfect study plan, like on what day you are going to what study, as well as a discipline study you are going to get. And the very important thing, you only have to go to the buy now section, and after in the buy now section you will find you have to apply the code that is Y422, and with this code you are going to get a big discount, like you can see flat 77% of your getting. And if you are enrolling through the application, then you will get the extra 1% off, that is 78% off. So that's how you actually enroll in our batches as well, right? So that's all for this session. I'm hoping that everyone just understand all the things, all the questions I have taken here. And if you're finding if you're finding our lecture is useful for you, if you're finding that our efforts are appreciable, so just hit the like button as much as you can. Okay, and share this video to your friends, to your colleagues, so that maximum number of our bankers can join with us in this session. So thank you everyone for joining me, and now we'll meet on the tomorrow at the same time.